Okay, guys, welcome to tonight's review. And today I'll also be reviewing AUDUSD. And the reason why I'm reviewing AUDUSD today is because I actually took a trade on AUDUSD, right? Um, so let's get down to business now. Actually, guys, I'll be reviewing Wednesday, 4th of January 2023, Australian dollar pairing the US dollar. Now, like I told you, now you see these lines on my chart. I already talked about it in my previous video, so you can watch it to get your hands on the information. The first thing I want you to know about price, about the market, Forex in its term is that the days of the week, right? Monday, Tuesday, through to Friday are very important in analysis because the combination of these days are what forms the weekly candle. Now, like I told us in our previous video, that to some people, support and resistance is good. That's what they do. To some people, it's indicator and they're making profits, but you can ask them, where is the consistency? Is the consistency there? If they can show you proof of consistency, then, but I doubt that. What I'm trying to say in essence is that what you see, this huge move from this low to this high, right, was not a factor of support and resistance or market structure or wherever you've learned. No, it is a factor of price. This move, this whole move here on Wednesday is a factor of price. What I'm trying to explain is that for price to move from a low to a particular high, there must be something that causes that move, right? And for price to move from a high to a particular low, there must be a reason for it. Things don't just happen because you don't say because okay, this level is a level of support, that's the reason why price is moving up, because this level is so level is a level of resistance, that's why price is reversing. No, that's very wrong. If you're still thinking like that, I want you to abolish that thought. It is very, very, very wrong. We are looking at the market from the perspective of um okay, we're looking at the market from the perspective of logic. Yeah, we're trying to reason, does it make sense to buy something because people say you should buy it? Let's say, for instance, you know that iPhone 14 is not needed for your work, right? But because people are buying it, you decide to, does it make sense for you to buy it? No. But if there is a reason behind you purchasing iPhone 14, you will definitely buy it, because then you know there will be, its efficiency would definitely show. What I'm trying to say here is that price don't move because your mentors tells you, okay, when price comes to resistance, it should reverse. When price comes to support, it should bounce off or break out or wherever, or patterns. Those patterns, those trend lines, those things, those Elliott wave theories and wherever, they are observations, right? They are, how will I put it now? They are things that happen, but they are not things that makes this market happen. In other words, for example, now retailers, I mean, might see this level as a relative resistance, right? Good. Yeah. This resistance here is not the reason why this fall happened. No. No, 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 no. Right? The reason why this fall happened is because of price. because there are resistance that sometimes gets broken and you think, okay, probably this should be a resistance, and you see that price will take you out. And the most annoying thing is that after taking you out, it continues in your direction. So why does that happen? Is it because that resistance does not hold, or maybe that's a wrong resistance? I don't think so. So resistance is a consequence of price. You see, this resistance you're seeing here is a consequence of price movement. And whenever you're seeing support, just know they are consequence of price movement. They are not the generator of the movement of price. What makes this market move is price. And like I told us, I said the first thing we want to put into consideration, there are things we put into consideration, and that's the open, the high, the low, and the close. I'll be talking extensively on all these things I've been saying for the past 3 days when I start a series on it. But for now, these teachings are just for review purpose. I want you to see these things happen day in, day out first before I now begin to teach you to trade it. I want you to see it yourself. Now, to save our time, I'm going to just draw out the opening price for the day, right? Because I'm actually reviewing Wednesday here, right? And then the low of the previous day. This was the low for the previous day. I'm going to draw that out in time here. It was the low for the previous day and the high for the previous day. Now, why am I not talking about the close of the previous day? I mean, there's open, there's high, there's low, and close of every day, right? So why am I not talking about the open and the close of the previous day? That's because the open of the day was the close. The open of this day, which is the previous day, was the close of the day after, right? The day before. Now, the open of the present day is the close of the previous day. In other words, we have our open already here as the close of the previous day when we were analyzing this yesterday, and we had our close here. So the open price and the close price, the open price only matters when we are trading this present day. Immediately we are done with this present day, we move on to the next day. The open price doesn't matter. And the closing price doesn't matter because nobody, well, as I don't know if there are people who knows where the closing price will be, but as for me, I don't know, right? I don't know where the closing price is going to be, and I only just allow that price to, give me what it has to give me, and I'm satisfied with it. Now, remember the first principle of day trading is always buy below the daily open and the daily high, and sell above the daily high. It's as simple as that. I'll be talking about the previous day high and the previous day low and stuff like that very soon. But for now, I deliberately don't want to talk about the reason why I want us to close that. But I want you to just make sure that it's in your subconsciousness that we will always plot the previous day high and the previous day low for a reason which I'll be explaining. Now, for those who trade Asia, I don't trade Asia session actually. I only trade London and New York. Now, you see this blue shaded area on my chart. This is something to, demarcate my London trading hours. Yeah, these are the period when I look for my entry, and this is my New York trading hour. These are the period when I look for my entry in New York. So anything outside this, like you see this white portion that is outside this blue portion, I don't trade inside. I don't take no entry there. And all this white section here, right, from this, end of this shaded black area down to next London session, I don't trade. Yeah, I don't trade during those period. Okay, that's how I do my thing. I don't know how you do your thing, how you've been taught, but this is what I teach my students, and it's been very, very effective. And it's not, I don't just plot it there because I want to plot it. There are reasons why they are plotted there, right? And these are things that I actually will be reserving for my students only. I won't be talking about that on my YouTube channel. But whatever I'm going to be teaching here on this channel, if you put it into practice, into and you know, you're dedicated and you're serious about it, you're definitely going to make lots of profits with it, because they are valuable information, tested and proven. Now, let's bring this day into, you know, perspective. I think I was able to make, yeah, this is from here now to this point here. That's I think I traded 100,000 units, and that should be giving me almost $4,000 in profit from this trade. But that's not what I'm looking at. What I actually want to show you is, remember I told you the first time I trade. Now, let's first of all look at Asian session. How could you have entered this trade? Was there any entry model here? Yes, of course. Now, when price opens for the day, like I explained to us in our previous class, I said, let's imagine this straight line is the opening price of the day, right? Good. Now, and let's imagine that we anticipate price to, you know, close higher for the day. Now, price don't just say move from the opening of the day and just go up like that. No, it doesn't happen like that. The reason is because although sometimes, yeah, it happens, but it is not every time. It is not most times, right? And moreover, that when price do something like this, it doesn't put the odds in your favor. You just want to relax and watch what price is actually doing. Let's imagine we are expecting an up close day, right? And you know, price is at, let's say this line here is $5, and price wants to close at $10 for the day. We as traders, we will be anticipating a lower drop, and you see this low drop here could be drop into an imbalance, it could be drop that grabbed liquidity, it could be into an order block, whatever entry model you have. I'll be talking about entry models also in our coming series whenever I'm going to start the series, but everything I'm doing here is just for review purpose. Okay, now let's say price move from $5 down to $3. Now, it doesn't matter if it's going to continue or not, right? The point is, we can now buy this market cheaper. And when investors see that they can buy a market cheaper, what do? They buy. It's as simple as that. Now, when, let's say, you know, price comes down to wherever price, market comes down to wherever price after maybe into an order block, take out liquidity, whatever reason it's coming down. The point is, at the end of the day, we had a closing day, the high made at a certain point, and then probably price just had to close at, let's say, at another price. Now, this is how the daily market movement, this is how price move every day, every single day. Every single day, you can go see it on your chart. No matter how small this, you know, down move is, there is a 80 to 90% chance that there will always be a point where you can buy the market cheaper, right, than just looking for buy entry above the opening price. When you look for buy entry above the opening price, you are actually at, I don't know, you're just taking necessary risk. Now, why do we buy below the opening price? It's very simple, because at that point, price is cheaper for the day. Why do we sell above the opening price? Because at that point, price is expensive for the day. So this opening price is like a demarcation between overbought and oversold, premium and discount, or whatever you want to call it. That's just it. Okay, so we'll get down to business. Now, if let's say I don't trade Asia session, but for those of us who trade Asia, we can see that we add our entry model here. Yeah, there's an entry here. I'm going to draw that out. Now you see this was the opening price for the day, and price swing down low. Now you see this swing down, right? I'm going to draw that out. What did it do? It actually did two things. The first thing was to first of all grab all the liquidity in New York and Asia session, right? See this consolidation, right? That's liquidity that was, you see this double low here, this relative low. Some of you people will be seeing these places as support and you'll be expecting it to hold. But why did markets take out your support and then move impulsively away? That's because support is a consequence of price. It is not the reason for price. I hope you're understanding what I'm trying to say now. Now, the first thing is it grabbed liquidity, and the second thing is it came into an imbalance here that's, was created after a valid order block. It's as simple as that. And then price moved impulsively. Now, because I don't trade Asia session, I won't be talking much about it. But that's basically is that. Now, mind you, we know that this is going to be an up close day. Why? Because liquidity is where? Above. You see that? You see this high point here, this high point here, this high point here, this high point here, all these highs, all this high, every single candlestick high that you see here are points of liquidity. This high, this high, this high, everything are points of liquidity, right? And because liquidity is much above than below, we remember I told you yesterday, I said market is going to where there is money. And where is the money? Money is above. So that explains the reason why this huge, although I was not expecting impulsive move to happen in Asia like this, because it rarely happens with some pairs. Once the pair is not an Asia trading pair, it rarely happens. And I'll be explaining why when we get to our series section. But for now, just follow up. Now, in London, we couldn't get an entry. I didn't trade this London because I didn't get an entry. But for those of you who, probably, for the sake of review, I'll be explaining how you could have made your entry here in London. It's as simple as what I've been explaining to you. You see this high? Now, when price created this double high, this first high and this second high, these two highs here are liquidity points. In other words, there is money resting above here. And it came down and started giving some, some vibes, started creating liquidity and stuff like that. Now, when you go to lower time frame, I'm trading on the, my explanation is on the 15 minutes, and I'm not going to lower time frame to save us time. But when I start a series explanation, it doesn't matter how long it's going to take us. For the sake of understanding and explanation, I'll be going to lots of time frames to explain everything for you. But the point I'm trying to say, you see this high here and this low. Those are the demarcation for what is to happen in this market. When this high was created and this low was created, then you begin to look for breakout. For example, if price breaks out of this, this down close candle here, then we know that probably prices will consolidate into New York or reverse. And if it should break this high, then we expect a continuation, and then you can just enter your trade here. But there is more. Remember I told you where the money is where the market goes to, and the money is where? Above here. And that explains the reason for continuation in London. Although I didn't see this early in the morning because I wasn't trading actually. I was busy with something else. I had to trade in New York. Now, I sold in New York. But how did I know that okay, I was supposed to be selling instead of buying? Why did I not assume that okay, this should be continuation of whatever is happening today? It's because of what is known as DPM. Now, DPM means daily pips movement. In other words, every candlestick, every instrument has its daily pip movement. I'll be talking about this as a whole topic on its own in the coming series. I want you to anticipate that series, right? The daily peak movement is the total peak movement of a particular instrument for a day, for days. In other words, for any trading day, there is a certain amount of pip that an instrument can move. For example, Australian dollar again and odd USD, right? Let's first of all look at the pip movement for today. From the low to the high, we have 169.9. That's like 170 pips movement in total for today move. And this 170 is not the average daily peak movement. The average daily peak movement for Australian dollar and the US dollar, the odd USD is by my research calculations and everything is 100. 100. When it goes to 100 and above, we begin to see that day as an oversold day. So when we see that day as an oversold day, we might start anticipating reversal either in New York or in London or in New York, depending on what um, time, uh, on what session the DPM was attained. I'll be explaining it, but just know that everything I'm doing now is just for review purpose, not for, I'm not actually not doing extensive teachings. I'm just giving you the snippets as to what to expect from my series. It's going to be fully power packed and I want you guys to plug in. And I want you to also practice what you're learning here. You don't just stop at, just watching my reviews and everything. Go to your chart. Don't just assume that because Charts with Max says it is, then it is. No, practice it yourself so you can begin to, master these things. Now, with the understanding of DPM, I was able to know that, okay, probably price would be collapsing in New York. When I say collapsing, I mean reversing. And now, considering that there is a consolidation, you see this whole move here? These are consolidations. Now, this consolidation could mean continuation or reversal. Now, how do I know that this is going to be a reversal? Because where is the most money lying? See all this low here, all these lows, like I explained to you, it's just an indication that what price wants to come down. It's as simple as APC. And then I had to sell my puts. Now, when this high here was created, right? This high, I did this high and this high. Now, for retailers, this is known to them as what? Resistance. Now, if I should ask you, why did this resistance form? You're going to explain to me, okay, there was buying pressure and then reversal, buying pressure and reversal. Come on, you can do more than that. No, I won't take that because that's very wrong. The whole thing here, this high, this high, this high, they are relative highs, right? And price could actually take this high or probably just not take it. The point I'm trying to make here is that the resistance, what you call resistance here, is just simple price. Pricing and repricing. Simple understanding of what happens day in, day out in the market. when something is called mirage, it means something that you think is there but it is not really there. You know, when you are traveling on, when you're on an express road, right? And then you look afar in front of you from a very far place, and it will be as if, you know, the floor is, there's water on the floor, but when you get to that spot where you think there is water there, you see that it's very dry. That's what we call mirage. And the resistance and support trend line, wherever, they are all mirage. They don't exist. They're just things to keep you busy and keep giving your money to the markets, to your brokers. And until you open your mind and accept the fact that you can be wrong, then you have nowhere to go. So I was able to sell here, right? And I'm going to show you my entry right now. So mind you, this is, you know, trading view paper trading, right? So everything I'm showing you here is 100% correct. There is no edit, there is no what's it called now, there is no editing or let's say broker, wherever. There's no lie here. This is truth. This is the truth. And you can see I sold here, right? And I've been able to make how much here? This is 5,980 or $50 in profit, as you can see that. And if I want to take profit here, I'm going to take profit, but I'm not taking profit. You know why? Because from this high, this New York high, price is going to market is going to move all the way to London. Yeah, I can start, you know, expecting a reversal in London, but once this is not in London, it's still going to fall until London. And if there is no reversal in London, then that's good news for me. Then I might be expecting a reversal in New York, and that's when I'll close the day. That's when I'll close this trade. So this is not rocket science. This is nothing difficult. This is nothing hard. It's what you do day in, day out. As a trader, you want to make sure that you have an edge in this market. And how do you get an edge? By having the right information. How do you get the right information? Getting plugged in to the right mentorship. So I'm going to be closing this for tonight. And before I close for tonight, I want to invite you to my Instagram on Friday, right? That's on Friday. Today is Thursday, right? So tomorrow, which is Friday, the non-farm payroll, there will be a live session trading on my Instagram. Okay, I'll be trading, so you can plug in and, you know, try to make some profits from there, and we can trade together. And I'll be revealing lots of things to you that is going to wow your mind. Okay, so that's for that. That's for tonight. Good night.